I have been going back into the crypto markets lately. Anytime Bitcoin drops below 17,000, I add to our positions there. Crypto is getting very interesting because we're finally starting to see the bear of regulation coming into play.
Kevin O'Leary seems to be moving on from his experience with FTX. He was the spokesperson for FTX, which was founded by Sam Bankman-Fried, who is now facing criminal charges for using his crypto exchange to defraud investors and users of billions of dollars. In this video, Kevin O'Leary reveals how he has changed his investment strategy. Remember to subscribe to the channel so you always get the best updates on crypto.
Cash right now on our cash desks, we have cash to put to work. We're picking up 3.2 to 3.8%. So it's a sort of see and wait. I have been going back into the crypto markets lately. Anytime Bitcoin drops below 17,000, I add to our positions there. Crypto is getting very interesting because we're finally starting to see the bear of regulation coming into play. And I think long-term, that's a good thing. These hearings in the Senate have really poked the bear, as I like to say. And I participated in the last hearings. And when I had a chance to talk to the people on the Hill, or the lawmakers, I sensed that they're frustrated now. They're tired of putting these hearings on every 6 months, every time one of these crypto company blows up and goes to zero. They're so unregulated. These unregulated exchanges are just they're all going to go to zero, and what's going to come out of it eventually is going to be a regulated crypto market, which I think will be very interesting because there's real merit. I mean, crypto itself is not the bad guy. Crypto is just software code. It's not the software code. It's all of these rogue players and these unregulated exchanges and the issuance of all these meritless tokens, the token on the exchange, all of this crap, if I excuse my French. Yeah, it's all going to go away. It's all going to go away.
The crypto world is heating up in 2023 as Bitcoin and other cryptocurrencies are experiencing a resurgence after a difficult period of losses. Experts are speculating that the crypto winter, similar to a bear market in traditional finance, may finally be coming to an end. Leading the pack, Bitcoin, the world's most popular cryptocurrency, has seen a staggering 25% increase over the past month. It's even breached the $20,000 mark for the first time since November of last year, when FTX's collapse sent shockwaves through the industry. Kevin O'Leary, who was a major player in the whole FTX saga, seems to be interested only in Bitcoin for now, but it seems his expectation that Bitcoin would go below $17,000 anytime soon has to be shelved. This resurgence in the crypto market has sparked some excitement, but many traders are not feeling confident that the bear run is over. Will this be the start of a new bull market for cryptocurrencies? According to Glassnode, an on-chain analytics company, Bitcoin has recently seen more profits than losses for the first time since June 2022. This is an important indicator, as during bear market cycles, many investors tend to sell their investments when they reach a break-even point or close to it, creating resistance in the market. The big question is, can the rally last? The recent rally has been the highest weekly gain in the last 100 weeks. The last time Bitcoin had such a rally was in February of 2021, when it went up by 25%. The recent rally was at 21%. What caused the rally was a $4 billion infusion of Bitcoin futures into the crypto market, as reported by Ki-Young Jun of CryptoQuant. Would we see a pullback in this heightened activity in the futures market? For now, Kevin O'Leary's baseline of $17,000 may not come anytime soon.
So I look at healthcare sector, very interesting. I like commodities. I like gold right now. I've pulled my horns in a little bit on tech because those are still trading at over 20 PEs, which is expensive, and those stocks have already had massive corrections. Media stocks are really interesting. They're fibrillating right now because of all the streaming losses, but you've seen some recovery in those names over the last 90 days as people start to say, well, who's going to survive the streaming wars and who isn't? Because media itself is an interesting business model if you think that you can get direct to consumer. Disney is under scrutiny now. I own that name. Nelson Phelps has said he wants to be an activist. That's probably good for the stock. And so you've got to find these situations. So underweighting tech, Not overweighting energy. I think energy's had a fantastic run, but I think you want to take a little bit off the table there. It's been a very, very good place to be last year. I don't think you'll get the same kind of returns this year. Finding those large cap names in the S&P that have strong balance sheets across multi-sectors that pay distributions, that's the play for 2023.
There's a lot of speculation that 2023 would usher in a recession. Because of this, most investors have a backup plan. For Kevin O'Leary, he's shifting his focus to value stocks and commodities. Gold has been holding its value fairly better than stocks and cryptocurrencies have so far. It even reached a 9-month high some days back, climbing up 2.1% within a week to settle at a value of $1,907.19 per ounce. While this rally is not as significant as that of Bitcoin, it is worth noting that gold has been one of the most stable assets in the past couple of months. This is the first time that precious metal is crossing $1,900 since May of 2021. One important event that every investor should be paying attention to is China's reopening. The country has been on lockdown for a while now as they've battled an upsurge in COVID-19 cases. This has devalued the yuan and impacted the Chinese economy in no small way, but it's also had a huge impact on the US economy. Now that China is reopening for business, the yuan is gaining while the dollar took a hit. We should expect this to have an impact on the commodities market, stocks market, and probably ripple into the crypto market too, as the economies of both the US and China try to find their equilibrium alongside each other. Next, Kevin O'Leary reveals how he is diversifying his portfolio in preparation for the uncertainties of 2023.
I'm only interested in companies that have a very strong ability to acquire customers profitably. That means they have to understand social media. I like consumer goods and services where they have hundreds of thousands of investors. I'm looking for companies that really understand their markets and are very savvy at marketing. Those are the ones that I do business with. And I'm kind of agnostic to sector. I do tech, I do consumer goods, I did cat DNA testing. Just looked at another business for pet supplies. I mean, there's all kinds of things that I get involved in, but it's really about the operator and their understanding on how to acquire customers and sell direct to them. That's where the highest margins are. I'm not interested in just all retail strategy anymore. I have a 5% weighting in Bitcoin. That's actually been performing quite well, even with all of these scandals and everything else. I've got a large allocation to equities. No equity more than 5%, no sector more than 20%. So it's very diversified. And I have a lot of cash on hand right now because of some sales I made last year before some of the taxes went into effect on share buybacks. So I'm actually shopping to put more money to work, and I'm doing it. Looking at private equity, all kinds of new alternatives are emerging. And so the whole idea is my job is to get up every morning and put capital to work and find the path of least resistance. My bogey is to make 6% a year. Doesn't sound like a lot, but it's not easy. And so when you think of a broad portfolio, to distribute 6% cash, that's not easy to do. But I've been very fortunate in the last decade or more, and I've been able to do that.
Retail investors usually invest through exchange-traded funds or ETFs, which are a basket of different stocks and other assets packaged together to help individual investors have a slice of different investments at a low entry cost. This makes investment affordable and accessible to individuals. The problem here is that sometimes the portfolio is too diversified, and the returns are usually low because they're designed to be as safe as possible. Kevin O'Leary is saying that he won't be investing as a retail investor, but rather chasing stakes in companies that he believes are undervalued. This is the same strategy big investors such as Warren Buffett employ. It doesn't work for those who don't have a lot of cash to invest, so this advice may not work for most people. But what about you guys? How do you plan to diversify your investments in 2023? Let us know in the comment section below, and please remember to like this video, subscribe to the channel, and check out our other videos for more content just like this.